Hello, my name is Richard Hemwood, Portfolio Manager of the Merchant West SCI Global Property Income Fund, and this is our third quarter 2023 review. There is growing optimism that we are near the top of the current interest rate hiking cycle. While inflation remains above most central bank targets, it is now trending in the right direction, and there is mounting evidence that the higher interest rates are finally having a negative impact on the US economy. While the US labor market remains robust, money supply and credit extension have slowed sharply. While some central bank officials are suggesting that interest rates could stay higher for longer, consensus in the market is for interest rates to start falling in the second or third quarter of next year. Heightened geopolitical tension in the Middle East and China's property market woes are also likely to contribute to a slowdown in global economic activity. Comments from several central bank officials that interest rates would need to stay higher for longer pushed US Treasury yields to multi-decade highs in the third quarter. Against the backdrop of rising global bond yields and increased geopolitical risks, global equity markets declined in the third quarter. The MSCI World Equity Index was down 3.5%, with MSCI Value Index outperforming the MSCI Growth Index. The FTSE 100 index in the UK was up 1%, one of the very few global equity markets to register a positive return in the third quarter. Global real estate markets were negatively impacted in the third quarter by the sharp spike in global bond yields, despite improving fundamentals across several property types. Market participants remain concerned about the refinancing risks many property landlords face. During the third quarter, the fund produced a negative return of 6.8% in South African Rand, slightly underperforming its benchmark and a CISA category average. The fund benefited from a positive return from its office exposure, but all its other sectors produced negative returns. The fund's best individual performer during the quarter was US office REIT Hudson Pacific, which was up 57%. While its worst individual performer was Growthpoint Australia, which was down 23%. The fund continues to maintain a full exposure to global listed property. The fund is well diversified across geographical regions, but does have significant exposure to North America, UK, and Europe, and is underweight Asia when compared to its benchmark. The fund is well diversified across various property types, and has exposure to alternative property types such as self-storage, healthcare, data centers, and mobile towers. Although the current regime of higher interest rates in developed markets has created short-term headwinds for global listed property, I believe the asset class should benefit from an easing in monetary policies over the medium term. The Merchant West SCI Global Property Income Fund offers South African investors direct offshore exposure, as well as exposure to highly specialized and unique property types not available in South Africa. An added benefit is the fund pays semi-annual distributions, although the net yield is relatively low. For further information, please look at our website.